You have got a 720 credit score and you need $10,000 to buy that car of your dreams. So you think approval is a slam dunk, right? Well, hold on. Because the real answer, could I get a 10K loan with a 720 credit score for a loan, isn't as simple as you think. Some dealers will tell you, no problem. Other might raise an eyebrow. And the truth is, there's one factor. Hint, it's not your score that can make or break your loan approval. Today, I'm going to reveal that game changer factor and show you exactly how to lock in that 10K loan with the best rates and terms. This is Funiktra, where I uncovered the money truths they don't teach you in school. And today, I'm answering the question, could I get a 10K loan with 720 credit score for a car? And why the real answer will either make you celebrate or completely change your car buying strategy. And trust me, once you hear the one factor that matters more than credit score for an auto loan, you will know exactly how to position yourself for success. Quick note before we start, I'm not a financial advisor. I'm just learning and sharing what I discovered on my journey to understand money. So take this as information, not advice. Now let's get into it step by step and complete blueprint on how to ensure you get it at the lowest interest rate possible. Short answer. The short answer is yes. A 720 credit score is generally strong enough to qualify for a $10,000 car loan. In fact, 720 is considered in good range by FICO. According to Experian, a 720 falls on the lower end of a good score. Experian.com lenders see you as acceptable borrower, so they will almost certainly approve a modest loan like $10,000, provided everything else checks out like income and stability. But here's the nuisance. You won't necessarily get the absolute best interest rate or terms with just the 720 score. As Experian points out, score in the good range is 670 to 739. Get solid approval odds, but not the rock bottom rates that excellent borrowers are like 740 plus points. Enjoy. As Experian.com, think of it this way, you will likely qualify, but your APR will be a bit higher than someone with 780 plus score. We will cover exactly what to expect in the moment. So why could the answer make you celebrate or rethink your strategy? Because while a 720 score could get you approved, other factors can significantly alter the outcome. We will dive into those next. Beyond the score, 7 critical factors. What really decides your loan? Your credit is huge, but lenders always look at more than just that number. Here are 4 critical factors besides 720 itself that lenders consider when approving a $10,000 car loan. First, income and employment. Lenders want to know you have steady work and enough income to make payments. As Experian says, lenders are generally required by law to assess your ability to repay. So they'll ask to pay stub or bank statements. Experian.com says that if you have been at your job for a while and earn enough, that's a big plus. For example, if you make $3,000 per month and your car payment is $200, that looks great. But if you're making only $500 a week in a part-time job, they might hesitate. The key is stability. 2 or more years on a job or in a consistent field is ideal, as per Experian.com. Second, debt to income ratio, DTI. This is percentage of your income that goes into debt payment each month. It's a make or break metric. Experian notes lenders want your DTI to be below about 50%. Experian.com and most experts say around 36% is even better. LendingTree.com and most experts says below around 36% is even better, according to LenderTree.com, a website. If you already have big loans eating up your paycheck, lenders get nervous. They will calculate your old debt payment plus proposed car payment plus divide by your gross income. Lower is better. Third, down payment or loan to value. A bigger down payment equals more equity in the car. Experian explains lenders limit how much they will finance based on the car's value, as per Experian.com. Even $2,000 or $3,000 on a $10,000 loan massively boosts approval odds. Dealers call this as skin in the game. Aim for 10 to 20% down payment if possible. Fourth, credit history quality. Beyond the score, lenders see payment history, length of credit, inquiries, Any recent negatives? A 720 score usually means your credit looks pretty clean, but always check for suppressors. Interest rate reality with the 720 score. Rates are higher now, no doubt, but your 720 lands you in a prime range. According to Experian 2025 data, new car loans prime up to like 661 to 780, which is estimate up to 6.4% APR. Super prime estimates up to 4.8%. Near prime estimates up to 9.6%. So let's talk about used car loans. Prime estimates up to 9.95 APR. Super prime estimate up to 7.7%. Near prime estimate up to 14.5%. So with your 720 score, expect new car 5 to 7% APR, used car 8 to 10% APR, still way better than someone with poor credit paying 15% plus. Lenders showdown, credit union versus bank versus dealership. Credit union best option, often 1 to 2% cheaper than bank, more flexible, lower fees, perfect for 720 plus borrowers. Bank, solid but usually 0.5% to 1.5% higher APR. Convenient if you already bank there. Dealership financing, easiest but most often expensive. Dealership markup interest. Add-ons inflate loan amounts. Only great if special promotional rates apply. Usually requires 700 and plus scores. Winner, credit union, always start in blueprint. First, check and prepare your finances. Pull your report, gather backstabs, lower your credit card balances. Second, set a reality budget. Use an auto loan calculator, decide terms, length, plan your down payment. Third, get pre-approved. Do 1 to 3 applications within 15 to 45 days so inquiries count as one. Fourth, shop for the car. Negotiate price first, financing second. Fifth, compare final loan offers. Use your pre-approval to force dealer to compete. Sixth, review the contract carefully. Watch for hidden fees and add-ons. Seventh, finalize and drive off. Take copies of all documents. Common pitfalls to avoid. Focusing on monthly payment, skipping rate shopping, accepting dealers add-on blindly, borrowing 100% with no down payment, allowing too much inquiries over many months, not reading the contract line by line. Negotiation strategies. Use pre-approval as leverage. Separate car pricing from financing. Negotiate trade-in last. Be ready to walk away. Ask for hidden rebates or incentives. Success stories. Alex have 720 score, income of $4,500 monthly, low debt, good down payment, gets pre-approved at 5.5%, negotiates car price down and ends up with 5% APR, saving up to $1,800 compared to the buyer with a 600 score. You can get a $10,000 auto loan with a 720 credit score and not just get approved, but with a great rate. Your income, stability, DTI, and down payment matters just as much as your score. You now have the short answer, all lenders' expectations, real rate estimates, full application blueprints, pitfalls to avoid, negotiation tactics. Your 720 already puts you ahead of the game. Now go out there and get that loan at the best rate possible.